Thank you for joining me on this video. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Simple Market Signals helps you understand the level of risk in the stock market through our proprietary market risk signals that are emailed to you every weekend as part of our weekly stock market-based newsletter, all for less than $20 per month. Today we will be doing technical analysis on the S&P 500 for Tuesday, April 14th, 2020. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for. And I will leave a link to their site in the description box below this video. Today we were up 3.06% on the S&P 500 and closed at 2846.06. What we're looking at here is an 18-month chart of the S&P 500. Each candlestick represents 1 day of trading. And what we can see here is we closed right at the point of kind of some overhead resistance that we're going to be running into here at the 2845 to 2855 level. So these two blue lines represent the lower of the two is the 2845 level and the upper is the 2855 level. And what we can see here is this area between 2845 and 2855 has acted as an area of support and resistance for at least a year now. And we can see here back in August of 2019, there was quite a bit of trading right around that area. And of course, the 2855 level is where we had our lows in October of 2019 before we bounced off of that and had the last leg of our previous bull market. So the fact that we've now got up to this 2845 to 2855 level, it's going to be pretty hard for these markets to, I think, continue to get up through this level, guys. And I think we need to be careful here, okay? We've come a long way in a short period of time. These other blue lines indicate other key areas of support and resistance that we'll need to keep our eyes on. This blue line here is the 2750 level, and we can see that we've really only had 3 days where we've closed above the 2750 level. So we definitely, if this market is going to continue to levitate here, we'll definitely want to stay above the 2750 level. This blue line is the 2630 level, and you can see here that we've only had 6 closes above the 2630 level in this entire advance off of what so far has been the lows of this downturn. And so the 2630 level will be extremely important for us to stay above if this market is going to stay in a positive mode. If we fall beneath the 2630 level, it is very likely that we'll find ourselves back down to this 2350 level at some point in the future. But guys, the math just doesn't add up, okay? Where we're at right now, where we close today, if we calculate that the earnings for 2020, calendar year 2020 on the S&P 500 are going to be 80% of what they were in calendar year 2019. And I think that's being optimistic. But let's say that earnings only fall 20% this year over last year's earnings. Where we're at right now, what that means is for the full calendar year of 2020, calculating that at a 20% drop over 2019 earnings, we're trading at a PE of almost 22 on the S&P 500, okay? So it is going to be extremely difficult for these markets to continue to go up, let alone at this pace, without the sales, revenue, and earnings to support stock prices and valuations. Thank you for watching today's video. Don't forget to subscribe to this channel, give me a thumbs up on this video, check out my other YouTube videos, and if you would like to learn more about how Simple Market Signals can help you in both up and down markets, you will want to watch these videos that are linked in the description box below this video.